Hello, I'm Satish Shukla. Agriculture commodity prices, particularly wheat, maize, soybean, and palm oil, fell sharply in the global market over the weekend after surging on February 24, when Russia ordered its troops into Ukraine. The prices of the most of these commodities have dropped by more than 5% as a member of the NATO led by the United States and other countries. Officials and other countries critical of Moscow's action have failed to reach an agreement that will affect the movement of food grains such as maize, wheat, and sunflower. If we talk about biodiesel demand, according to the traders, concern about the supply of these commodities have subsided in some ways. Palm oil spot prices fell over the weekend to 6.732 MYR per ton after reaching at 7,000 MYR on February 24. The benchmark May futures contract fell down 6,000 MYR to 5,984 MYR. During the weekend, March contract of canola, a type of rapeseed, fell by more than 5% to $1.008 per ton on the Intercontinental Exchange. Prices for palm oil and canola have risen due to two factors. One, market participants were concerned that the supplies of sunflower oil from Ukraine, the primary supplier, would be disrupted. Second, whenever crude oil prices reach around $100 per barrel, both of these oils are diverted for the production of biodiesel. Wheat and maize prices have also risen on the fears that supply from Russia and Ukraine, both major exporters on the global market, may be disrupted. There are two sources of concern. The first is that Russia may prevent Ukraine from exporting these commodities, and the second is that any sanctions imposed by NATO and its allies have an impact on Russian shipment to global market. Moscow, Kyiv global export share. Even barley prices have risen as Russia 4.96 million ton or MT and Ukraine 5.04 billion ton account for more than 40% of the global supply. In the case of sunflower oil, Ukraine 6.86 million ton and Russia 3.2 million ton almost make up the entire global supply of 11.24 million ton. Again, Moscow 37.26 million ton and Kyiv 80.85 million ton contribute over 25% of the export in the world wheat market. If we talk about maize, in terms of maize, both of these countries, Russia 2.28 million ton and Ukraine 27.95 million ton, have shipped out nearly 10% of global export of 305.94 million ton. India and exports shows the rise in commodity prices has benefited Indian farmers to some extent. Prices rose as tension between the Moscow and Kyiv rose, peaking on the day Putin announced his decision. However, prices fell slightly over the weekend. This is because India is viewed as a source capable of meeting short-term needs and supplying in small quantities for such urgent need. It can in particular meet the needs of countries in South Asia, Southeast Asia and West Asia in addition to Africa. Other benefits that New Delhi enjoys include price competitiveness and ample stock in the country, which have been bolstered by the record production of these grains. Move on to oil imports turned costly. Oilseed prices, on the other hand, have risen as import of oils such as palm, soybean and sunflower became more expensive. The global market reaction to the Ukraine crisis was mirrored in domestic agriculture market as well. Wheat prices topped 2,000 per quintal last week, with the Madhya Pradesh accounting for the highest arrival of 63,713 tons. Maize prices are hovering around $1,900 per quintal, with Madhya Pradesh once again accounting for the majority of arrival. 19,043 soybean prices are firmly above 6,000 per quintal in various agriculture markets, and mustard rates are also firm around these levels. Last week, Maharashtra and Madhya Pradesh accounted more than 90% of soybean arrivals, while Rajasthan, Madhya Pradesh and Gujarat made up over 80%. For more such type of videos, stay connected with Krishi Jagran. Thank you.